Hey folks, on Monday, we had another setup in our short-term traders edge, and I was at my computer when the setup happened, so our members were notified before the trade happened. Like I let everybody know with the exact entry and management rules. So the trade moved in our favor by a factor of 1-to-1 reward to risk, which meant we could remove the risk and then, price after that move back towards our entry. So today, rather than giving you another, PowerPoint presentation or wait to show you some, big winning trade, because just showing you big winning trades won't make you a trader, nor will it set realistic expectations. I want to show you this actual trade on the chart because it demonstrates the reality of how this short-term trading approach works, and most importantly, the incredible value of trade management. Like, it's really, really important. Obviously, you have to understand how to effectively use this kind of approach. So I'll show you how and why this setup was one that we were looking for, and then I'll go over exactly how we handled the trade. Okay, so rather than just talk about this trade and verbally, I thought it would be more useful just to show you on the chart what actually happened with this trade. It was on the U.S. Canadian dollar pair, and this trade actually happened on Monday. I'm recording this on a Tuesday right now. And it was a setup that happened as per our rules for short-term trading, the short-term trader's edge. And importantly, our members were notified about the trade before it happened because I happened to be at my computer. I'm not always, but if I am, I let people know what I see. So they knew exactly where we were, where we were looking to get in and how we were going to, manage it because it's all in the rules. So look at this trade. First of all, we don't do anything unless we're at a key level of some kind. And this level of old support, once it gets broken, is what we look for a shorting trade, for resistance, right? See how, and this is all trending down like this. So I was pretty excited. I thought this was going to be a good trade. But what I think doesn't matter. We don't know what price is going to do. And that's an important thing to know. So I'll just walk you through what we were seeing here. So we're at that resistance level. There are some very specific price action protocols that we need to see, conditions that have to line up before we consider taking one of these trades. And once they do, we have very clear rules for where we enter and, just as importantly, how we manage the trade. That managing the trade is that's the holy grail of trading right there, trade management. So you can see here that what happened is this action, as prices go on making higher highs and higher lows and higher highs, and then it did this. See how it broke this low here? You've seen other videos that we have about swing breaks, and they're very, very powerful price action conditions to watch for. But it's not just about a swing break for this approach. We have to qualify these swings. We have to sell them or buy them at a very specific place and all that. But I just want you to see the gist of what happened here, because you got to get into the trenches here and see, what really happens with these trades. This trade rallies up. The fill was actually at the peak of this candle. It was actually one of those times. Sometimes you get filled to the pip. Sometimes you miss it. Sometimes it goes straight through and stops you out. We never know. We just put our order in, gets filled. Our stop goes above here. This needed a 10 pip risk. That's it. So you can imagine, you can trade quite a few lots and still keep your overall risk at say 0.5% of your account. Which is what we recommend. So you sell here, 10 pip risk on this drop. Just this little drop right here, we got up over 10 pips. That's 1-to-1. That's more than 1-to-1. That's an important point in our trade management process, because once we reach that 1-to-1 level, we do not allow a loss. In fact, I tell our members, especially when they're learning this, take a profit. Take half your position off for a 1-to-1 profit. Just get used to making money with this, because it happens most times. Not every time. Sometimes it goes right against you, but most times you can get the risk out of these trades and or take a 1-to-1 profit like this. And what it did after that, you don't have any idea. If it had gone down to the target we were looking for, it would have been a 3-to-1 reward risk, and those happen. You'll get some of those. I won't say, no, I shouldn't even say anything about it, because I never know what's going to happen. I don't want to give you any, false expectations and all that. I just want you to see the reality of this kind of trading. And But again, once we reach a one-to-one reward to risk, we don't allow a loss. Okay, see how market turned around, went back up, and here was the entry here, and it went up above again. So you're going to get stopped out for just break even on the remaining part of your trade. Okay, so somebody might look at this chart and say, well, too bad that trade didn't work out. Actually, that's not really what happened. This trade worked out just fine. This is exactly what we look for. This is a good trade. This is as good a trade as any. You got to take the trade, because if you're trying to predict and say, well, I don't think this is going to go down, that's ridiculous. You have no idea. And that's why you have to have very good, strong, objective rules that make sense. And after seeing these trades for 20 years, that's what these rules are. And that's one of the things I really like about this whole approach. We're not trying to predict exactly what the market's going to do next, because we don't know. Nobody knows. We're waiting for a very specific objective setup, and then we're managing the trade according to a predefined process, right? We're not trying to predict anything. And that's the whole idea behind the short-term trader's edge. Find the setup, take the trade, manage the risk, and then rinse and repeat. Okay? And that's really what I wanted to show you with this trade. I could have waited and showed you the next big winning trade, and well, that's just not going to help you very much. I want you to see what it's like in the trenches here. What actually happens when you get into one of these trades, right? So this is a good example of disciplined, objective, short-term trading. Okay, and like I said, it's Tuesday as I'm recording this. So yeah, we'll see what the rest of the week brings. There could be more trades, and if so, we will simply follow our rules. And that's really the point, right? So short-term trading isn't about jumping in and out of the market or trying to predict every little move. You'll lose your account doing stuff like that. It's about having a very specific objective setup, knowing exactly what you're looking for, and then managing the trade according to a defined process. Super important. Monday's trade didn't need to become a big winner for it to be a good trade. It was a good trade. It was a good setup. We got the one-to-one move. We removed the risk and or took some profit at one-to-one reward to risk, which I recommend people to do when they're starting. And when the market came back, well, you simply are taken out at your entry. Okay, then we wait for the next opportunity. That's it. That's the rinse and repeat process behind the short-term trader's edge. It's only Tuesday, so we'll see what the rest of the week brings, but I'll keep showing you these trades so you can see how the process actually works in real time. And, maybe you want to start getting on board with these trades and learn the complete setup rules. So if that's the case, there's a link in the text below this video or in the email that you received. Alrighty, thanks so much, everyone. I hope you enjoyed this video, and have a great weekend and week ahead.